Hello and welcome to the Three Questions podcast, where we dive deep into the world of wealth management and connect you with industry experts. I'm your host, Wayne Baxter, Senior Executive Manager at One Capital Management. If you or someone close to you is considering purchasing real estate in the USA, stay tuned. Our topic, the three questions cross-border investors should ask before purchasing real estate in the USA. Thank you for taking time to check us out. And if you enjoyed this episode of the Three Questions podcast, please consider liking this video and subscribing to our YouTube and podcast channels. Welcome to another episode of Three Questions with Wayne Baxter. Today, we're diving into the world of cross-border real estate investing with a guest who knows the ins and outs of the U.S. market. Joining me is Alejandro Uribe. He is Vice President of Developer Production at Lending Spot, where he helps investors navigate the complexities of financing properties in the U.S.A. Our topic, the three questions cross-border investors should ask before purchasing real estate in the USA. Alejandro, we made it. Thank you for making time to join us, and great to see you.
I'm excited to be here, and thank you for inviting me.
Oh, it's my pleasure. Okay. Now, before we get to our questions, let's take a couple minutes here just so that we can familiarize our audience with Lending Spot. Just, where are you located, who you are, who your clients are, what is it actually that you do, what services do you provide?
Yes, Lending Spot is right now the third largest bank in production of Florida. And we have one of the largest or the largest lender portfolio of any other bank. What that means is that we have so many programs and so many options that we are going to be able to adapt to any person trying to finance. No income documentation, foreign nationals, and different types of versions of things. So we are catering to not only the regular domestic buyer, but to anybody that needs to purchase.
And that would include folks coming from Canada to the U.S., obviously, which I think we've talked about this already, that, a lot of our listeners are located north of the border.
Yes, sir. Yes, but one of our biggest fortes is, and one of my most common client is a foreign national. 90% of my production is that.
Perfect. And again, so that perfectly segues. I wanted to bring that up before we get to our questions. So maybe you could just sort of add onto that about some of the products and services that, say, if you're someone living in Canada and you're thinking of a relocation to Florida. And again, I've been talking to more than a few folks about that here in the last few weeks. Some of the services and expertise that you can add to that for those folks looking to make that relocation.
Yes, we pride ourselves from being a one-stop shop where we can assist the foreign national bar in opening an LLC if they need one. Many times it's of their benefit. There are agreements with FIRPTA and certain types of government agreements that give you tax benefits. We'll advise you on that. Opening accounts. Opening an account for a Canadian is not that difficult, but many other things, and we just don't stop at the mortgage and at the rate. We want to guide the client and his family, or if it's an investment, into having a whole package and delivering everything. And that's 90%, as I said, of my production. We specialize in it. And right now, we have all the lenders available that do it. And we're extremely well-versed at it.
So the good news is that even though you're based in Florida, you can work with clients across the U.S. and beyond.
I have clients in China, in Brazil, all over the world. Yes, unfortunately, we won't be able to see each other face to face, but right now with technology, it's very easy to get the comfort. And I usually have create a lot of videos for my clients, and I break down their closing costs and their their payment within a video where they can share to their family, they can repeat it, and they feel comfortable that it's a video, that it can't be said that there's a misunderstanding, or that I said this or that I said that. It's right there on a video, and there's no way for me to reenact from that.
Well, Alejandro, I've been working here in the U.S. now since 2012, and I would say that probably, I'm guesstimating, but I would say about 90 to 95% of my client meetings are in the format that we're using right now. So I'm not surprised at all, especially in this day and age, especially post-COVID, that doing Zoom meetings or meeting virtually is, I think, for most people pretty commonplace. A lot more than it would have been, say, back in 2005 or 2010. So pretty normal. And it's great that you're able to work with clients all over the place. And I'm really glad. I'm really happy that we connected. As I see you being a great resource for myself and for my clients. Okay, so we're going to be discussing the 3 questions cross-border investors should ask before purchasing real estate in the U.S.A. Now, our questions are from the perspective of a real estate investor from either across the United States, Canada, or beyond. So keep that in mind. These are not questions we're asking the customer, but what they are asking us. So, Alejandro, if you're ready, we'll get right into it.
Yes, sir. Go ahead.
Okay. Question number 1. Oh, yeah, this is constantly being brought up these days. Should I wait until interest rates come down before consider buying? I cannot wait to hear your take on this.
Well, that particular question is definitely not only from customers from Canada, but all around the world. And I want to make a point before I answer it, that it happens to be that the Canadian foreign national citizen is the easiest of the foreign nationals because we share many documents. The language is the same. There is a credit bureau that we share. So when I get a foreign national that is from Canada, I smile because it's 10,000 times less work. Now, to answer your question, to me, really, it's about the customer doing arithmetic. It's not calculus, it's not high-level geometry, it's not anything, it's arithmetic. And this is the situation. What is the difference between a monthly payment between a 7% interest rate that you're getting right now or a 6.8, and you want it to be a 6%, let's say? The difference in most medium mortgages is $70 or $80 in the next 6 months. In the next 6 months, you're going to be paying $70 more a month. Now, property values in Florida, and there's a distinction. It's not countrywide, it's Florida. And many other countries do share this, but not many other states do share this, but not every state. Have an appreciation increase of an average of 5 to 9 or 10%, depending on the area. Let's go on the low side and keep it at 5. In the next 6 months, you're going to pay $720 in extra payment because you wanted to wait for that rate to drop. But the appreciation that you lost in those 6 months, it's almost $12,000. So that's the arithmetic that I'm talking about. Do not focus on the rate. It's on the appreciation of the property. And the other issue is that when the rates do go down, it's going to be a buying frenzy and prices are going to go up.
Interesting your calculation of capital on the appreciation of real estate. Now, when we do capital forecasting, I'll tell you right now, we assume 4%. But even at 4%, your point, the math still makes sense.
Absolutely. It's $750. Let's bring it down to $10,000 in 6 months. Let's bring it down to $8,000 in 6 months. It absolutely doesn't make sense.
Okay, so Alejandro, again, you've years of experience in this space, in the mortgage space. What do you think is what have you seen as the biggest misconception that people have about waiting for rates to drop before jumping into the U.S. real estate market? The perception, what do you think it is?
Well, first of all, be very careful with the news because the news has a tendency to be tricky in their verbiage.
Slightly, little bit hyperbole sometimes there.
Yes, and they say the countries or they say the average, and you don't know what average they're looking at. So let's be very careful. For example, there's a very big misconception that they say that Florida has too much inventory. That is absolutely true, but it's true. But break it down. Yes, there is an issue in Florida with condominiums that are 30 years and older. But
boy, that's a whole podcast topic right there.
You remember the collapse of the
Yes, for
condominium.
sure.
And because of that, there was many laws and there are issues with those condominiums that are 30 years and older. But if you take those condominiums 30 years and older out of the inventory, you know how much they represent? 80% of the inventory.
So
So
80% of the excess inventory in Florida right now are condos 30 years and older.
So when people say there's too much inventory, there's too much properties for sale, yes, it's true. But understand that's 80% are condominiums of 30 years and older. So you're left with an actual, if you really find out with the immigration coming into Florida, which is about 1,300 people a day. And this is not out of the country immigration. This means immigration from companies transferring over here, from people from New
Yeah,
York transferring over
I can
here.
vouch for it. I can vouch for it. You know how I
Yes,
can vouch for it?
and the inventory is not sufficient.
Driving between Miami and Fort Lauderdale is enough to convince me.
Yeah, no, you see the traffic here and the inventory, if you take that 80% out, the inventory is not sufficient. And there is statistics where if you analyze single family homes, how much they've appreciated in the past 6 months, and it's 7% increase in value on single family homes in the past 6 months.
Interesting. Um, Alejandro Uribe is my guest today. He is a VP with Lending Spot. Great to have you here, Alejandro. We're going to go on to question number 2.
Yes, sir.
And this is something that we see, especially here in California. Question number 2: what are the pros and cons of renting versus buying real estate? And again, I'll bring it up right now. There's a lot of, because of all the issues they have here with, um, obviously with insurance in particular, and the cost of property tax. There's a lot of people debate whether or not it makes more sense to own or rent here. I'm very interested in getting your thoughts on this.
Yes, sir. I have a software that I give clients that are renting that it's called a rent versus buy. And again, it's arithmetic. If you look at a rent versus buy on a month-to-month basis of next month, you're not looking at this in its whole entirety. You have to look at purchasing a home at the worst case scenario, you're staying 3, 4, 5 years in this property. Even if it's a starter home, you're staying 3 years. What's going to happen? There's 3 numbers. Obviously, the rent that you're throwing away in the trash, that's obvious. Another one pretty obvious is the appreciation of the property, that it's gaining value every year. And the third one is that if I lend you $400,000 and after 3 years you don't owe 400,000, you owe less, not a lot less. That I'll give it, but that's also income that you reduced your debt in that amount. That's the tactical material part of it. Now let's go into a sentimental part. You can't blow that wall off because you want to expand your dining room. You can't change the windows. You can't do this because you're not allowed to. That is more of a romantic feeling thing, but there is a lot of value on knowing that this house is yours and you can do whatever you want with it. That's sentimental. The mathematical part is that after 5 years, you will be leaving money on the table.
I'm gonna throw out a question for you here, and maybe you won't want to answer, but it's always fun when we try to see if we can come up with interesting follow-ups here. Based on your experience and based on present situations, are there specific U.S. markets right now where you think you concede that renting makes more sense than buying right now, especially for someone managing properties from abroad? Like, do you think there are what your thoughts?
Yes, it depends on the tax laws of each state, mostly. California, New York have high taxes, and that will make a dent on these savings or earnings that I'm talking about. But Florida happens to be one of the lowest tax states there is. And that is why you see huge 400 or 500 companies migrating their headquarters to Florida. What happens when an Amazon brings their headquarters to Florida? That's what's happening with SpaceX. That's what's happening. You need employees for these companies, and they're specialized employees. You can't just go into Florida and get applications. These people have to migrate from other states because they're specialized workers. And what's going to happen? They need a place to live. And when you have these companies requiring thousands and thousands of employees, builders are counting on that. And that increases the population besides the normal migration because of the weather and whatever we have here in Florida.
Okay, so you would concede that California is a bit of a challenge, and New York as well.
I'm not. I have to study a little bit more the scenario of California. To be honest with you, I'll brag and mouth out whatever I know very well, but I would have to check a little bit more the details of California.
Fair enough.
I don't know that much about California.
Yeah. Well, I would say the challenge here is, you got two, and that is obviously, well, yeah, I think the big one is the property and the property insurance is a biggie, and I don't know if we ever talked about this before, but I've done some capital forecasts looking at property insurance going into the next decade, and I could see scenarios where someone with a house worth $2.5 million is going to be paying $130,000 a year just for property insurance, and that's going to be interesting.
We're feeling that also here in Florida because of the hurricanes and everything. We have a lot of insurance companies that have left the state, and the insurance prices are hiking, and that is one of the issues that we have. But then you say, okay, let's not buy a single family home so we can avoid that homeowners insurance that's so high. Let's go to a condominium. But then you have the high HOA fees of a condominium, and you kind of have to balance it. And that's what we help you with.
Well, I'm really glad we're having this conversation, and I want to take us to question number 3. So in this one, we're going to be talking about, and I'm going to just read the question to you, but this is a classic example of a cross-border case. I'm a self-employed entrepreneur who has recently moved from the U.S. to the U.S. from Canada. Can I qualify for a mortgage? So I'm telling you right now, I'm working on cases right now of families that are relocating from Canada to the U.S., entrepreneurs, they're setting up a business here, and obviously they want to own a home. They got a family to raise. So as that entrepreneur, can you help them qualify?
The answer in short is absolutely yes. But the reasoning behind it is that these banks are using logic. Florida has a population that is very heavy on self-employed people. And it is as simple as getting an accountant's letter from your local accountant, from your accountant, stating what you do for a living, how much you made last year, and how much you have made year to date, and that's it. The banks don't require foreign tax returns. They don't require proof of deposits. It's just that letter. We send that letter already vetted to the client and to the CPA for them to guide themselves, and it literally has blank spaces for them to fill out. And that's basically it. We just need the CPA letter stating what you make gross, and that's basically the only verification of income that we need. That's on that program. If by any chance you don't have the ability of a CPA or that doesn't work, we have no income documentation loans, and there's many. You can send me 12 months of bank statements. I see all the deposits. I add them all up and divide them by 12. That's your income. No tax returns, no letter. And then the third one, there's more, but the third most popular one, and this is very popular one, is called a DSCR. It's a debt service ratio. And basically, if you're an investor, you're buying a property, your mortgage is $4,000 a month, but we can prove that it can be rented for $4,100 a month, the bank approves you. because they're thinking it doesn't make sense that he wouldn't pay me back if we know that this property can be rented for at least his mortgage payment. No income documentation. The appraiser does the calculation of the rent. It passes, it supersedes or equals, it can equal the monthly payment of the mortgage, and you're done.
So Alejandro, generally speaking, I know unique situations always arise, but what type of documentations do lenders typically want from a self-employed cross-border investor if their business is based outside of the U.S.? So in this case, we've been talking about here, but if their business is outside the U.S., but they want to buy a property in the U.S., is there different types of documentary
No, it's
requirements?
standard amongst all the countries. And it does differ if you want to do income documentation or not. For income documentation, which is the most heavily documented, is the CPA letter that I mentioned, a bank reference letter, and a utility bill of your primary home, so they know that you're not using it as a primary home over here. That's for an investor coming over here. Now, if you don't want the income documentation, it's a bank reference letter and bank statements, and you're done. It's really simple. It's really very little documentation. And my team and I have 3 people under me that only eat and breathe foreign national loans, and they're very well trained to help through the process.
Okay, so you know what? This sounds really encouraging. I got to tell you. Now, if a cross-border investor is listening to us right now and they're feeling a bit overwhelmed, they're thinking about interest rates. They're thinking, quite frankly, buy versus rent and qualifying for a mortgage, even though I must admit I think give people a lot of hope. But I'm thinking specifically of the self-employed entrepreneur. What is the one piece of advice you would give them to confidently take that next step towards getting into the U.S. real estate market?
It's a little bit of a summary of what we spoke about. Please do not wait for the interest rates to go down. When you find out, the whole world already find out because it's on the news. And the prices of the properties are going to increase by 8-10%. So you're trying to save a few $100s a month on a payment, but you're going to pay 10% more on a 500, 600, or whatever amount of money of purchase price you have. Secondly, it is absolutely easy, and please call me so I can give you a breakdown of your monthly payment, and it's going to be totally clear, and I'll help you make it make sense. If it doesn't, I'll be the first one to stop you. And third is that renting over here is good if you are only staying for a few days. I say don't even rent, stay at a hotel or an Airbnb. If you're going to be in Florida in somewhat of a good amount of time, buy a property. The appreciation of it will more than pay for itself. And now you have something to inherit to your family. Now you can, in the future, cash out the equity of it and buy a second one and create a portfolio here. It's financially 10 times more savvy than renting.
Interesting. So you mentioned about contacting you, and I'm glad you brought that up because we have folks that are watching on the internet here on our website. We put your contact information right underneath of you on the screen, so they know how to get a hold of you. But we have a lot of folks that listen to the podcast on either Apple or Spotify. For those folks that obviously can't see your contact information, what is the best way for them to contact you?
Thank you for that. My email would be the best. It's Uribe@LendingSpot. That's AUR as in Richard, I, B as in boy, E as in Eric, at lendingspot.net. And my cell phone is 305-992-5056. And it'll be a pleasure to help you.
Alejandro, thank you so much for joining us today. You were a great guest, and you provided a lot of really helpful information today. Alejandro Uribe is the Vice President of Developer Production at LendingSpot. Alejandro, thank you very much.
Thank you for having me, sir. Have a great day. Thank you very much.
I look forward to bringing you the 3 Questions podcast, and I hope you find them educational and informative. Please consider liking this video and subscribing to our podcast and YouTube channels. And to receive a notification of when our latest episode has been posted, please click on the notifications bell. Lastly, to schedule an online consultation with me to discuss your wealth management needs, please click on the link in the description box below, www.onecapital.com/meet with Wayne. Thank you, and we will see you soon.